Hi there, welcome to Kneppy Invest and welcome to the ASX Daily Rundown video, July 3rd, 2024 edition. An interesting day on the market. Thankfully, we are in the green because I'm pretty sure the Nasdaq had a pretty good day overnight. Yes, up 1%. Even Dow Jones was up 0.41%. So if we were down today after two down days, following up days in the United States, I thought questions would have to be asked. What is happening here? But we are up. Up probably not as much as I thought we might have done. I thought we might have had a better rally than this, particularly tech, only up 0.12%. What's happening there? Resources had a pretty good day today, however, but I'm getting a bit ahead of myself. I'll talk about the indices, sectors, and best performing and worst performing companies later in the day. However, a fairly boring day on the markets in terms of announcements. But I have come up with the top 5 announcements of the day, or the top 5 stocks of the day. And one of those companies is listed on Nasdaq. And I have put that company at number 5. I will be looking at some charts, about 5 charts. And hopefully, if this video is no longer than 35 minutes, I'll do another answer and reply session and release that video on the morning of Thursday or Friday, the 4th or 5th of July. Okay, so the agenda for today's video is fairly similar than all the other ones. We'll have a look at the ASX today, no tweets or anything like that. Although I did actually bookmark a few tweets, but not going to actually have a look at any tweets, but we'll go straight into the ASX today, look at those best and worst performing indices, sectors, and companies. Then we'll have a look at the top 5 announcements of the day. I might mention 1 or 2 other companies as well, and then we'll have a look at some charts. So let's get stuck into the ASX today, and hopefully you've had a good day. Hopefully your portfolio is up. A little bit of volatility. At one point today, the tech was down. Don't know what's happening with tech. Anyway, let's have a look at the sectors. Mining's had a good day. According to this, information technology is up. However, the XTX, which is the ASX All Technology, is only up 0.13%. So there is some difference between the XTX indice versus the information technology sector. I have no idea what the difference is. Maybe less companies in the XTX compared to the IT, which would make sense because the sector would be all-encompassing, every single company within that sector. Indices probably is limited to just a select few. So if you want to study that a little bit more and tell us, that'd be great. Otherwise, energy also has had a pretty good day. So just by looking at the best performing sectors, I would assume all the mining companies, BHP, Rio Tinto, Fortescue, Woodside, Santos, maybe WiseTech or REA Group. Well, REA Group is information technology plus real estate, and both of those are up. Staples Healthcare's had okay days. About 5 sectors are down: discretionary, industrials, financials, which probably means banks are down. Telecommunication, Telstra's down. Utilities, AGL Energy, which is not in the top 20. Origin Energy, those sort of companies. Transurban also is industrials, which I believe it should be in utilities, but that's just me. 5 sectors down, 6 sectors up. Okay, so let's have a look at the ASX 20. Let's have a look at which companies, and I'm assuming right now, and I'm going to say 11 companies up, 8 down, 1 flat. 11 up, close. 12 up, 7 down, 1 flat. And more than likely, we're going to see quite a few mining companies at the top. Yeah, Fortescue, there's WiseTech, which is a tech, Rio Tinto, BHP, Santos, Goodman Group, real estate, there's Woolworths. And the worst performing companies, REA Group. So I thought that might have been up, but then we have National Australia Bank, Transurban, Insurance, Commonwealth Bank, Wesfarmers, and Aristocrat. Okay, so let's have a look at the best performing and worst performing companies today. The top gainers by percentage change. We have Waratah Minerals, and I have put Waratah Minerals in my top 5 announcements of the day. Yes, a company I've never heard of before today, up 100% on pretty good turnover, and the chart looks interesting as well. Otherwise, nothing of interest there. There's AML 3D again, up 25%. So Next Investors is doing a good job at promoting that company. It's on a pretty good tear right now, but I have no interest in trading that because that interest in that company could die away fairly quickly. So I'd say it's probably a trading or day trading thing. RemSense. I did talk about RemSense in one of my some of my previous videos. I have no idea. I'm pretty sure the share price has dipped back, so this could be a bounce. Oh yeah, the chart. Yeah, the chart looks pretty ugly, doesn't it? And this could be just a bit of noise for RemSense, so no reason to get excited about that. And now let's have a look at companies listed by market cap. So Stanmore Resources, I want to have a look at this particular company's chart. That's a coal company. It did trigger on one of my scans the other day, one of my screeners. Zip's having a pretty good day. Nuix is up. Satire's bouncing. Coria as well. 29 metals, which is copper. Smart Parking. Actinogen's had another really good day. I'm going to have a look at a few of these charts, including Zip, Nuix, and also Vulcan. Is Vulcan here? No. Vulcan Energy has also been requested. And I'm also going to have a look at the Merricks. So Woodside, I'm going to have a look at Woodside and also Stanmore Resources. Okay, so let's have a look at the worst performing companies today. And hopefully there's no big surprises here. A fairly low turnover, except for Chalice Mining, down 15.8. Okay, so Chalice Mining did make it in my top 5 announcements. Came in number 3, but I thought the share price would be up, not down 15.8%. You might understand why when we look at the particular announcement. Now, I don't understand this company or know this company all too well, but obviously this particular announcement disappointed the market, and I don't know why right now. And otherwise, nothing else. There's Demerix. Yeah, Demerix is down 10%. So that's one of the reasons why I want to talk about it. And another reason is because someone asked me whether I'm still holding Demerix. And that's a way to look at the company's chart, update you on the company's chart, and also answer some comments or some questions I have received. So let's have a look at top losers by market cap. So Liontown Resources, there's Chalice Mining. Electro-Optics has been on a really good tear. So we'll put that on a look at some charts. So this could be just a little bit of a possible buy the dip situation. SmartPay down. Race Oncology, I've been looking at that company, down at 6%. Not sure if that is buy the dip. Optiscan, definitely. I've been waiting for the share price of that company to dip. It looks like it's dipping right now. And otherwise, nothing of interest otherwise. I think I said otherwise twice there. Okay, so let's get to the top 5 announcements of the day. But before we start, I just want to talk about one company. This company is called, in fact, I should have looked at any announcements that have been released since 10 a.m. So what I'm looking for here is any sort of wording in the title. So I'm looking for trading update. And we got a business update from Inventus. And, well, I don't care about, I'm not even open up this business update. Oh, no. And the whole reason behind that is there's a buyer at 0.2 cents and a seller at 6 cents. There's a massive difference between the buyers and sellers. And I'd say this company is highly illiquidly traded. In fact, there was a trade yesterday, and the previous trade to that was the 14th of June. So I'm not even going to have a look at this particular business update from Inventus. But the company I did want to talk about was Melodial Global Health. Now, I remember this share price is at 0.5 cents. So I'm not going to even think about trading this at all. No way. But the reason I just want to talk about this company is because I looked at this company a few weeks ago because they just did a share consolidation. The second share consolidation the company has done in 1 year. So when the share price gets to 0.1 cents, they do share consolidation, it seems like. It seems like the share price is heading back to that price point. And the share price was 4 cents on the 18th of June. So I don't know what's happening with this company. You can see the massive decrease in share price from day to day from the 19th of June. So we're talking about 57% decrease, 41%. It rose 20% on the 21st, down 42, 28, 20, 25, and now it's down to 0.5 cents. The company did release a business update or trading update. Yeah, trading update. I did open it up and then I went, I'm not going to have a look at this company. Yeah, I don't care what they're doing. They keep doing share consolidations. The market doesn't like this company at all. There's no point even looking at it. Look at the share price, 0.5 cents. So this is I would call this company at this point in time an absolutely disaster on the ASX because they've done 2 share consolidations to get the share price up from 0.1 cents, and it's heading back there right now. So stay clear, well clear, in my opinion, of this particular company. Even if you have a look at the chart, because of these share consolidations, look at that chart, is ugly. In fact, according to this, share price has dropped from $280 in late 2020 to a current share price of 0.5. Now, obviously, the share price wasn't $280 back then, but the company has done at least a couple of share consolidations. So the amount of your shares, if you bought back in 2021, has significantly decreased. Significantly decreased. You might have held like 10,000 shares back then. Now it's down to maybe 10 shares. Okay, so beware of this company. Definitely not a company I want to look at again, unless they do weird things. Okay, so coming in at number 5, we have the company that is listed overseas on the Nasdaq, a fairly popular company for Australian investors, and that company is Tesla. Now, what I want to talk about Tesla for? Well, the share price of Tesla rose 10% overnight. Daytime, their time, but overnight, our time. So here we go. Up 10.2%. And look at the share price going on an absolute tear over the past 2 weeks. Share price has risen by about 25%. Not quite 25%. Very close to 25% over the past 4 to 5 trading days. So what happened? What has caused this sudden interest in Tesla? So just go to Google, go to news, and it should say. Here we go. So I'll just zoom in here. So from the AFR, Tesla surges as quarterly deliveries fall less than expected. Yes, less than expected. So deliveries did fall, but not quite as much as the market expected. So again, it's not about the performance of the company. It's all about expectations. And if a company, say, drops revenue by 99% and the market expects it to drop 100%, the share price will rally. I shouldn't say it's ridiculous, but the reasoning behind that is the whole reason the price of a company is at the current level is because there's expectations from the market, and the analysis put all those expectations into their valuation model, and the valuation model spits out a valuation of the company. So if the numbers the company actually produces are better than expected, they have to redo their models, and they spit out a different number, a higher number. So Tesla surges as quarterly deliveries fall less than expected. From AFR, Drive says Tesla global sales reveal price cuts are working, but not well enough. So you get different spins. Share price rallied 10%. Price cuts can't save Tesla from worldwide sales drop. There you go. And Elon Musk's laughable solution to Tesla's child labor worries. Woolworths shopper slams Tesla driver's selfish car act. Anyway, so that's why the share price of Tesla has rallied 10%, simply because the deliveries were not as bad as expected. They still dropped, but not as bad as expected. This is another reason why I find the American market really fickle. It's only about the short-term news, nothing about the long-term story. And I've seen this play over and over again. And this is another reason why I'm thinking more and more that American markets aren't tradable. You should not trade. You just hold companies for the long term. High quality companies. So that's what I'm thinking now with the American markets. It's all about finding high quality companies and holding for long term and being able to weather these short term movements in a company's share price. The other thing I'm going to mention with Tesla is ARK Invest released on June the 12th. I think I might have talked about this. Released their expected value for the company in 2029, 2,600. Share price right now is 231. So they're expecting this to be a 10-bagger from here, which is absolutely insane. And if I have a feeling I have shown you this before. Their expected value, 2,600, their bear case and the bull case. And even the bear case is only $2,000. I shouldn't say only $2,000. That's still a 10-bagger from here. That's their bear case. And here it is. They're modeled with no autonomy 350, so still significantly higher than it is here. That's with no autonomy. So they're expecting autonomy to bring a lot of value to this company. And funnily enough, I was reading another article today, I forget where, about how 50% of Australians don't trust autonomous vehicles. And I'm like, how can you not trust autonomous vehicles? because it's humans who are the reason behind all the crashes. And when I'm on the road and it was 50% autonomous vehicles, 50% humans, I'd feel much safer, much safer. So I don't understand why people wouldn't trust autonomous vehicles, because it's the people who cause crashes. It's another reason why governments around the world want autonomous vehicles, because crashes cause money. When you crash, it causes a lot of money, not only particularly for countries with universal healthcare, health costs, and also to fix all the crashes and all the stuff that cause damage to local infrastructure. And yeah, governments want autonomous vehicles because they're going to be way less crashes. In fact, crashes should virtually go down to zero when it's perfected. Yeah, so I don't understand why people would rather see people driving autonomous vehicles. There's just this lack of trust in the autonomous vehicles or even in AI when, yeah, it boggles my mind, but people are different. And anyway, so Tesla coming in at number 5. And the only reason Tesla came in at number 5 because there's no other announcements that were worthy. In fact, even the other companies' announcements were not that worthy, to be honest with you. So we're in a very quiet period right now before we start to see, or before we start to enter a really busy time, when we start to see quarterly activities reports, quarterly cash flow reports, Appendix 4Cs, Appendix 5Bs, towards the end of July. That really ramps up, and then we go into August, my favorite month of the year, reporting month, and I'm going to be busy from probably the second last week of July all the way through to the end of August. And by the end of August, I just can't wait for that month to drop. Now, coming in number 4 is a company I've talked about, a company called Karma Co International. This company does Carver, something like that. Anyway, Carver. So they released an announcement titled "E-commerce sales exceed $18,000 500 per day in a Joe." That's not a lot of money per month. What's that per month? $500,000 per month. So that's $1.5 million per quarter. I don't have to do a calculator. So 30 days in a week, times that by 3. So you got 54, 550,000. We'll say $600,000 a month, $1.8 million a quarter in sales. Now let's just have a look at the most recent. And here it is. On the 5th of June, they released e-commerce sales up 45% to 16,000. So sales are rising, but just because sales are rising doesn't mean they have reached any important inflection point right now. Possibly they've had to decrease the margin to increase the sales. That's a possibility. So I need more proof about this company. The other problem is the company is right on 1 cent. Today it was 0.8 cents, and I refuse to buy companies whose share price is below 1 cent. I refuse it. But in saying that, the chart does look interesting, and I think the share price of this company really wants to break out. It's been going sideways for a long time. We are seeing volume increasing. There's no doubt about that. We really started to see the volume increase back in July last year. See a little bit of increase in volume. That was signifying the bottom, and then we started to see. Then we saw a dead period in volume. Market was interested in the company. Huge share price going sideways. And then we started to see volume increasing in February this year. So this could have been around the results, and the volume has really ramped up the last few months. And share price wanted to break out, but on what day was that? The 5th of June, when they released the last e-commerce update. But we haven't seen as much excitement in this update as that one, which is understandable, because on that day, when they released the previous update, share price got to 2 cents. It's down halved to 1 cent. So I would expect a little bit more volatility. And if I see the share price, and if I was interested in taking a trade position in the company, and I saw the share price drop to maybe 0.8 cents, I could become interested, because if they keep releasing these monthly sales updates, and if the sales updates keep improving, this could push up the share price. So definitely one to have on your radar. I'm just going to have a look at the most recent Appendix 4C, which I probably did last time I looked at this company. They do release quite a bit of information as well. Looks like they did a couple raising. Let's go back to the most recent Appendix 4C. So we're talking about between $1.5 million and $1.8 million in receipts or revenue in a quarter. So let's have a look at the most recent quarter. They received $915,000. And the company was way off being operating cash flow positive. In fact, they were negative by $926,000. So this company is still probably not close excuse me, still not close to reaching that important inflection point, but they have a good marketing team. I have to give you that. They have a good marketing team and their sales are improving. But my question is on margins. And I think we'll know a lot when the company does release their Appendix 4C in the next 3 weeks, 3.5 weeks. So they released this Appendix 4C on the 30th of April. So probably the last day they could have released it. So hopefully they don't do that again. And they release it towards the end of trading. If a company is listening to this, release your Appendix 4C or 5B as quick as possible. Don't leave it to the last second. Okay, so that's Karma Co. Coming in number 4. Coming in number 3, let's have a look at Chalice Mining. Share price down 15.8% on a strategic memorandum of understanding with Mitsubishi Corporation. Now, a lot of times when the market sees memorandum of understanding, they get excited and the share price usually pops up. I don't get excited about MOUs. I've never got excited about MOUs. In my opinion, they mean absolutely nothing. They're just a memorandum. I'm not a lawyer, but to me, memorandum of understanding isn't really a contract or anything like that. It's not that important. And I thought Mitsubishi Corporation, I thought the market would fall for this. Obviously not. I did actually open up and look at it because I saw the share price down. I was like, what have I missed? Why is the market hating on this strategic MOU with Mitsubishi Corporation? So they executed a memorandum of understanding to advance development of the 100% owned Gonaville PGE. Is that platinum grade elements? PGE, platinum something, plutonium, PGE mining, platinum group elements. I was trying to understand the G group elements. Anyway. And look, from mining.com, so platinum, palladium, rhodium, ruthenium, osmium, and iridium. And there's an article from Mining Company or mining.com. Not much information in that. Anyway, so I tried to go through this, but yeah, the MOU establishes a general framework for collaboration on technical financing, marketing, and offtake aspects of the project during the ongoing PFS. So I didn't find anything to absolutely love or hate about this announcement. But again, I'm not a big expert or even know much about this company. I thought they were gold. I always thought this company was gold. Am I wrong? I always thought this company was gold. I'm going to have just Google. No, see, I was wrong. I thought this company was gold. Maybe that's another company. In fact, let's have a look. I'm going to have a look at the chart. Chalice Mining. And where, I'm pretty sure I got this company in my, it's in my gold watch list. I still think this company is gold. Let's go back 2 years. Let's go look at 2 years ago and see what their announcements were about. Has this company pivoted? Oh, no, they were talking about nickel, copper, PGE targets back then. Let's have a look at one of their presentations. Maybe I got this company completely wrong. I always thought they were Gold Explorer. So I maybe have this company in the wrong watch list. And of course, ComSec takes 6 years to open up an announcement when it should take a split second. That's ComSec for you. And the start of a new, My apologies to Chalice Mining. I always had you as a gold company. There you go. I've learned something new today. Okay. Anyway, let's go back to the chart. And it doesn't really matter because, the chart doesn't look good now, but the chart back here looked good. I always thought back in 2020 when the share price took off, it was about gold. I always thought it was about gold, but look at that breakout. I'm trying to study breakouts. So this is a beautiful breakout on the 23rd of March 2020 near the bottom of the COVID-19 financial panic. Share price on this day rose 137.5%. What stands this out from all the others? I don't know. That's what I'm trying to study. I'm going to put this in my high volume bag. I'm trying to study this. It did break out to a multi-year high, if not an all-time high. Yeah, so that could be one of the reasons why. And then share price went to all the way to above $10 and has dropped back to $1.29. And the chart looks Still looks pretty. It looks like the share price is going sideways. It's consolidating. But I wouldn't say the share price has come out of the consolidation phase or even into an uptrend. I'd say it's just going sideways right now. So still a little bit of negative sentiment in there. And I think this day hasn't helped. Some pretty big volume coming in. So that's Chalice Mining coming in at number 3. Coming in at number 2, we have the company I know nothing about, Waratah Minerals. Share price up 100% last time I looked, up 104% now. Further high-grade results from Spur Drilling. Now, it's not really the announcement that has led me to put this company at number 2. It's the chart. Okay, so I don't even know. So it's copper, gold and copper. Okay, so we go. And I don't think this company is in any of my watch lists. It looks like it's an exploring company. 89 meters, that's pretty good. Not sure the grades are great, but 89 meters at that sort of grade might be pretty good. So I have many years ago, I did look at how to read gold results, and what you're looking for is a nice depth, not deep, but depth as in the hit, deep hit, and 100 meters is a really good, and then the grade, of course, is pretty important as well. So if you saw like 100 meters at 4 grams per ton, that would be a tremendous hit. But the market likes this from Waratah Minerals. So let's have a look at the chart. 57 meters, yeah, the one below that, 57 meters at 2.5 grams per ton, 16 meters at 5.59, 9 meters at 9.33. So it does look pretty good. I'll be honest with you, it does look interesting. But the main reason I wanted to include this company, even I've never heard of it, and what I'm going to do is I'm going to put this, if I haven't already, I'm going to put this into my high volume spec. I want to study this moving forward because this could be a breakout. And that's the main reason this company has come in number 2. Probably should have come in number 1 because I do like the potential of this company. Now, according to this, share price was up 122%. So it does look like share price has pulled back in the last 15 minutes. So if you do open up ComSec, because ComSec is not delayed, TradingView is. So you do have seen a little bit of selling, but this could be a breakout. So what I'm going to do with this company over the next few days, if the share price, if we don't see much selling, and by selling, what I mean, not much selling, but what I mean by that is if we don't see a big red candlestick, if we don't see a share price down all the way down to like 17 cents or something like that, if we see a maintained buying, so there was going to be supply because there's going to be profit takers, but what I want to see is enough demand scooping up extra supply of the shares by profit takers. So that's why the share price has dropped just in the last 15 minutes, because we have seen a little bit of selling. And I think maybe one of the reasons there's been a little bit of selling is because some of the day traders or whatever got in fairly early. And you can sort of see, yeah, the share price it started at about 14 cents. And you can see a really nice rally in the share price in the first about 2.5 hours of trading. Share price went to a high of almost 30 cents. So 14 cents to 30 cents within 3 hours of trading. So if you saw this announcement, you liked it, and you're a day trader, you've done really well today. But we did see a little bit of a dip, and then share price has risen back to 28 cents, and we've seen a little bit of a dip again. So this could be an interesting breakout. So potential breakout. This is exactly what I'm looking for every single day. We saw a bit of interest in this company back in December. See some really good volume coming in on the 14th of December, and that was a failed breakout. And there is reasons why that was a failed breakout, is because the share price was higher not that long ago before that potential breakout. But here for Waratah Minerals, the last time share price was this high was way back in May 2022. So we're talking about 2 years ago, and more than likely, many of the shareholders back here who are holding shares have probably sold out by now, or they could be selling out today. So that could be an extra supply of shares on the market. So this is an interesting chart. We also saw a consolidation period as well. Share price went sideways, and now the breakout. I'm going to be following this company tomorrow and possibly on Friday just to see how trading goes for Waratah Minerals, a company I've never heard of until today. Coming in at number 1, unfortunately, this is unfortunate news, Booktopia. Booktopia, no trading today, and there's a reason behind that. It's because they've appointed voluntary administrators. Does not mean the company is going bankrupt, but I think they just couldn't raise funding. So they wanted some funding and they couldn't get it. So they brought in the voluntary or the administrators to come in and have a look to see what they can do to save the company. I don't think we've seen any other. No, there we go. What do they say here? The administrators are undertaking an urgent assessment of Booktopia's business while options for its sale and or recapitalization are explored. So this is not the end of Booktopia. So if you do have shares, and I don't know why you would have shares, but if you do have shares in this company, this is not necessarily the end. Maybe the end, but it's not necessarily the end. Now, I wanted to have a look at why this has happened to Booktopia. Now, structural issues with selling books, sure. The company had been successful up until maybe 2 years ago. They were increasing revenue, they were profitable. So I went back to Hot Copper and I found this really good post from Azimuts86S. One post. So this person only had one post on Hot Copper, and this was it. And I don't mind these sort of posts. Okay, so he actually went in, or this person, could be a she, went into detail about Booktopia, could be a disgruntled employee, or could be really disgruntled. No, it says not held. 17 upvotes for great analysis, and I actually agree with that. Although I can't, I'm not logged in, so. So this person knows Booktopia intimately, which makes me think, yeah, they're somehow involved or were involved with the company, and can say that neither Amazon nor the lack of overseas book buying had anything to do with Booktopia's demise, nor did the lack of direct sales of education books. In financial year 21, Booktopia delivered $12.8 million in EBITDA. Amazon was already operating in Australia, and Booktopia was receiving weekly air freight consignments from the USA and UK. It was operating smoothly and profitably. How do you think it made $12.8 million? By the way, in 2021, 31% of Booktopia sales were going to primary, secondary, and tertiary school students. In short, it was doing just fine. Thank you very much. Why do you think it was valued at $2.30 per share? Now it's 4.5 cents. This is the most important paragraph. And this person could be exactly right. And I'm going to believe this person because I do like what this person states. The root cause of Booktopia's failure was a decision in late 2021, early 2022, to go on a spending spree with new offices at Rhodes in Sydney, an ill-conceived investment in a UK book distributor seeking acquisition targets in Canada that cost approximately $1.5 million and didn't generate a cent, and a massive failure in the government in the management of its various distribution centers, which led to huge stock shortages and delays in sending books to customers. Despite the best efforts of the non-executive directors, the executive management of the company from December 2020 to May 2022 were solely responsible for the destruction of shareholder wealth to the tune of approximately $16 million. On top of this was the ACCC fine of $6 million. This is being paid via installments of $1.5 million per annum and was caused by one person failing to review the company's terms and conditions before the IPO. The ACCC is now a creditor for approximately $4.5 million. A substantial number of fabulous people, again, I think this person may have worked there, fabulous people across the business were dismayed at the behavior of the executive management during this period. Almost all of them were ultimately dismissed, made redundant, or forced to resign due to the competence of two people. That is the truth about Booktopia's corporate failure. So thank you for that post, as you might, because I went back through all the announcements. I was trying to find and had a look at some of the financials, trying to find what caused these issues with Booktopia. What could we learn from Booktopia? One of the things to learn could be they're just in the wrong market. But as this person stated, they actually were performing well before 2021. And I do think greed and overambition got the better of the company in the end. If they didn't list on the ASX, if they didn't have those ambitions, I have no doubt this company would still be operating and wouldn't be having these financial difficulties right now. And these ambitions come back to expanding too quickly, or the want to expand too quickly, particularly overseas. So Booktopia may not be the end for the company, but this company has been under stress. And again, there's simply no reason to be owning this company just based off the chart. Look at this ugly, ugly chart. And there is the breakdown. This is when you should have sold, somewhere back in late 2021 at a share price of about 260, maybe 250, and you would have saved a lot of money. There was actually no reason to even think about owning this company because there was no uptrend in the share price, except just August 2021. There was possibly a developing uptrend there, but it was short-lived. So that's coming in at number one. We have Booktopia, a possible sad story. Now I'm going to have a look at a few charts. And this video has going on longer than anticipated, so I won't be doing an answer reply video after this. Anyway, so let's have a look at Woodside. And that's not the chart. Let's go to Woodside. So we have seen a bounce in Woodside. I had seen some chatter about this company that the share price has broken out. I wouldn't go that far with this company right now. Share price still in a downtrend. Now, the share price has rallied the last 2 weeks from $27 to $29. The other thing is oil has rallied as well. So this is just a rally on the back of oil. But you notice there is a bit of detachment from oil prices to Woodside. Woodside has been a well-defined downtrend since August of last year, while oil has been just all over the place. So if you look at oil, yeah, it's been all over the place. There was actually a nice rally in oil from December all the way through to April. But if you go back to Woodside, and I probably should overlay oil. In fact, I should do that. Let's overlay. I always make mistakes when I try to do this. US oil, pressure is on, Michael. US oil, a new price scale. There we go. I'm just going to make it a little bit larger. And we'll make it black. And we'll make it like that. There we go. So there was, without a doubt, a bit of a dislocation between Woodside share price and oil from December through to April. So you can see share price, or the price of oil was going up, but at the same time, the share price of Woodside was going down. So I'm not sure what was happening with Woodside. Not a company I followed too closely, I'll be honest with you. In fact, I would rate Woodside as one of the worst quality companies in the ASX 20, if not the worst. And there is reasons behind that. And I'll talk about those reasons when I do a video on the ranking, my own personal ranking of the ASX 20 companies. This company would come near the bottom. Now, this is not necessarily a breakout, but I am paying a little bit more attention to this company now. And you can see the share price rallied a little bit from December through to February when oil was rallying, but then there was a pivot into February where it could have been results or something, and the share price just tanked it. It does look like $27 around that level is a floor on Woodside. So if you have a look at the weekly chart, there could be reasons for that. Nope, there we go. And yeah, this is the reason why I have no interest in this company for a long, and I think this company's low quality is, look at the chart. This is a weekly chart going back to 2012. There's no trend. This is just a trading company. And I find it weird when experts like on Ausbiz, of course, say this is a buy. Oh, we like Woodside for the long term. Why? It hasn't proven anything. History doesn't repeat, but often does rhyme. And those who look at the history of Woodside would say, well, why would you think this is a long-term buy? That's my thinking when it comes to this company. It needs to prove something. Anyway, so that's Woodside. A lot of mentions of this company. I'm not that enthusiastic about it right now, but it's got to a very important level. And the reason I say that is if you just look at this sort of zone right there, you can see the share price. Well, got to click that. The share price back in December and March, you can see the share price bounced out of this level and then in April fell right through it. So this should be a sort of resistance zone for Woodside. So if it breaks up above this zone, that would be actually a little bit bullish. So that's Woodside. Zip is on a nice little tear. So I'm actually officially trading this now because this was in my short-term portfolio and I've now transferred, not all of them, but many of my companies in my short-term portfolio or small cap portfolio, not short-term, small cap portfolio to my trading portfolio. So I'm actually actively trading this now. And zip, there's no reason to sell. It's looking pretty good. It's getting up to, again, we'll put another little rectangle here. It's getting up to these highs we saw back in March. Yeah, so this is in another resistance zone. And if the share price gets above $1.60, that would be bullish for Zip. So Zip's looking pretty good. Nuix is another one I'm trading, and they had a good day today. So I just want to have a look at the chart, which I do every day, and this is a beautiful looking chart. Beautiful looking chart. No reasons to even think about taking profits with Nuix. That's one thing I want to do. Don't take profits too early. Someone asked about Vulcan. In fact, so let's have a look. Hugh thanks for sharing. Love to hear your thought on Vulcan. Nice bounce at support today. So let's see what the person was talking about. Oh, there it is. Absolutely. So this would have been yesterday, and there was a bounce off support. And that support is around about 360 or so. And why is that support? Well, go back to March, April last year. You can see the share price struggled to get above that level. And then it got above that level in May, 8th of May, on strength. I don't know why volume is not showing up. So I'm going to refresh. It does this sometimes. It just gets rid of one of my layers. So let's go back to Vulcan. Because I need to see volume. And on this breakout, we did see a little bit of hands volume, and the share price went on a rally. It's pulled back all the way to that support level, and now the share price has bounced off it. Not only yesterday, today has followed through up another 4.6%. We have seen a little bit of selling today, but not a lot. And the reason maybe there's a little bit of selling is the share price has moved into sort of a resistance zone, not a big resistance zone, but definitely a small one there for Vulcan. So interesting for Vulcan, but a lot of volatility with that company. Demerix down 10% today. It's okay. In fact, I could even think about adding this dip. Share price has fallen from 66 cents to 47 cents. This could be a buy the dip situation, but I want to see some confirmation on that because this is a fairly negative, bearish one-day candlestick, down 10.48%. Has the share price kept on falling? Let's have a look at the updated share price. Still at 47 cents. And a lot of people do look at the buyers and sellers. I don't really look at that because that could change quite quickly. We can see a lot of buyers between 44 and 46.5 cents. A lot of see the volume is really high, but if you look at sellers, not a lot of volume all the way down. So they're scattered out. So even though there's more sellers than buyers, those buyers are really in a very small window here between 44 and 46.5 cents. So and the volume today, in fact, I didn't look at that. The volume today, slightly higher than the last few days, but nothing to get too concerned about. So definitely a buy the dip situation. We have seen this in the past. When the share price gets into this zone, this short-term moving average channel, it's a buy the dip situation. So it's Demerix. Stanmore popped up on my radar the other day because the share price broke out. There it is. Yep. And I was thinking to myself, I should buy this because it's broken out. And by this little cross here, broken out. A couple of reasons. We have the cross, and also the share price is at a 6 month, or not quite. Last time share price was this high was February, early February. So, what's that? So almost a 5 month high. Stanmore Resources and coal. I heard the reason why coal and coal companies want to rally is because some big mine in Queensland, coal mine in Queensland, has been put on care and maintenance or something. I didn't really look that deep into it. Where's coal? And Newcastle Coal hasn't done anything. Okay. And finally, EOS, Electro-Optic System, has been on a nice run. And these two candlesticks are pretty bearish. So up 6.4% yesterday, really nice one-day candlestick. And today's candlestick is negative, down 4.8%. I think it's called Bearish Engulfing or something like that. I'm not an expert on these Bearish Engulfing. Here it is, Engulfing patterns. There's a bearish. Does that look fairly similar to what we're looking at today? Of course, similar, isn't it? Maybe not quite. I mean, maybe with the engulfing, the size of the red has to be greater than the size of the green candlestick. So maybe there's another slightly different one. Bearish railway tracks or something like that. Maybe. I don't know. But yeah, anyway, whatever. Okay, so that's all I got for today because this video has gone 45 minutes. I was going to do the answer reply video, but I thought maybe this video would be like 30 minutes long, but it's okay. I do have a few. Actually, no, what we'll do is we'll answer a few of your questions. How's that? So Swimming 11 says, looks like Metcash has a lot of interest. Solid volumes, any thoughts, Kneppy? And Method 341 says, it looks like it's about to crash. And Swimming says, thanks, I better sell out now. Okay, so let's have a look at Metcash. Metcash, MTS. No, let's just have a look at the chart. Metcash is IGA and some other stuff, like a supermarket store. And yeah, I look at this chart and go straight away, no, thank you. Now, maybe there is a support level. Let's have a look at the weekly chart. So what I'll do here, I'll just put a line right in there. I mean, there is a bit of support at about 350, just below where the share price is right now. And the share price has rallied the last 3 days, but the volume hasn't been great. Although the volume, if you look at the last 2 weeks, the volume has increased. But we saw some really big volume coming in on the down days. That's not a good sign. And this could be just a little bit of a, I wouldn't say dead cat bounce, but a little bit of bounce. But if you do see the share price get and below, fall below 350 on strength, that would be fairly bearish for Metcash. So I have no interest in Metcash. It could crash. And it could fall to about 350, and that could be support because that has been support for this company over the past year. It's not a long time, but it's over the past year, 350 or actually about 345. We'll say in that zone. So between about 350 and 340 has been a support zone for this company. So that's Metcash. Thank you, Swimming 11 and Method 341. Blacktop Images, have you sold out of Adrad? I have not sold out. This is one of my holdings in my small cap portfolio that is not trending, so I'm going to sell out eventually. But I'm being patient with this one. So I bought at 720, share price is 720. So it's trending down, in fact. So technically, I probably should sell. Trending down, but I think it could be at a support level. So sort of in that zone, 70 cents is a support level. So I'm actually no rush to sell this right now. They did release a negative announcement, and that's why the share price has fallen. But this is not that expensive, to be honest with you. And if they remain profitable, I get at least a nice dividend. So I'm in no rush to sell this right now, but I have put a sell bid at 78 cents, just in case it rallies a little bit. So that's Adrad. So I am selling some of my small cap positions, but I'm in no rush. I don't have to rush to sell some of those positions just yet. And Vulcan, yeah, they've already talked about Vulcan. Okay, and Dredge, NZ, and I'm pretty sure now this person comes from New Zealand because they say it. There you go, they say it. Gold Dredger, miner living in New Zealand. There we go. Also bought into EROADs. In fact, I have not put a bid in for EROAD. Has that been a mistake? No, it hasn't. I was going to put in a bid to add to my position, EROAD. I bought at 90 cents. I should put in where I bought. It was about somewhere here in late May. And I was going to put another bid in to add to my position at about $1. In fact, I was going to put it at 99 cents. Yeah, just below $1, just in case. We saw some selling today, but we haven't seen setting. In fact, the share price on the next trade will increase. The first buy is at $19.5. I think this is a breakout. I've said it. I said it yesterday, I think, and I think this is the breakout. But I do expect eventually the share price to pull back maybe to $1, and I'll add to my position. Now, as Dredge also mentioned, SciDev. I am actually a holder of SciDev. I've been a holder of SciDev for about 5-6 years. And it is in my small cap portfolio, and I'm not going to sell this position because the chart is looking really good. And that's based off their really good Appendix 4C they released in the March or for the March quarter. I'm pretty sure I did at least one video on this. Let's have a look. STV. Now, I've done many videos on this company. There it is. Initial analysis, August 20, 2020, SciDev. And I'm pretty sure I've done at least a few Appendix 4Cs. There we go. So my last video on this company was April the 25th, 2024, when they did release their Appendix 4C. And you can just see I do this company a lot. And one of the reasons I do a few videos on this company is because I'm a shareholder. And I've been a shareholder for this company a long time. And I just know this company okay, good. And I'm very happy the share price has taken off because I do think this company is really undervalued. And go back to my April 25 video and have a look at that video to understand why. So thank you, Dredge. And you also mentioned in New Zealand you pay zero capital gains tax on your trading profits. Maybe I should move to New Zealand. Zero capital gains. I'm sure you know New Zealand. Okay, so yeah, does New Zealand have zero capital gains tax? Does not have a comprehensive. Okay, whatever. Okay. I'd love to live in New Zealand, particularly southern. I love mountains. Love mountains. My favorite part of the world is actually Western United States and Canada because of the mountains and the diverse geographical features. For instance, you go from the highest point in the lower 48, Mount Whitney, to the lowest point in the lower 48, which is Furnace Valley in Death Valley. I think it's called Furnace Creek in Death Valley. And you can do that in less than a day. You could do it in a few hours. And I just actually, Death Valley is a surprising place. I loved Death Valley. A bit too hot though. So thank you, Dredge. And that's going to be it for today's video. I wanted to talk about this one, Jake Barry, but unfortunately I did not get to that. No, I'm going to talk about it now. I'm going to talk about this. Right? So Jake Barry asks, have only recently been investing in the market and finding your videos super helpful. Thank you. I was wondering if you had a look at HZN, which I believe is Hazer, or SXE. Well, SXE is easy. I am definitely trading this company, and I like this company. It's a lot of positive momentum behind this company, a lot of tailwinds, but this is, for me, just a trading stock. And eventually, I believe those tailwinds will come to an end. Not sure when. It could be 5 years from now. I have no idea. And this is just a trading stock. So I initially bought $1 back in March. I've added to my position back in May. And I will add again to this trading position as I see fit, particularly if I see a little bit of a dip. You have seen a dip, but not quite deep enough. So yeah, I do like Southern Cross Electrical Engineering. The other fascinating thing about this company, it's being mentioned more and more by experts on AusBiz The Core. So they do know the story behind this company, the headwinds or the tailwinds behind this company, and that is what is driving the share price. Fund managers are becoming interested in this company. Really good volume as well, so a nice company. Hazer, I believe it's Hazer, HZN. Oh no, Horizon. What's Hazer? Let's have a look what Hazer is. Probably HZR, yeah. HZN, Horizon, I know nothing about this company. Absolutely nothing. So I just go to the chart, and the chart looks really weird. In fact, I'm just going to... Yeah, that's better. It's just, it is slowly trending up, but very slowly. I don't know anything about this company. I am assuming it's an oil producer. I could be completely wrong. Let's just go to this HZN. Markup 292 million, so it's not that small. 1.62 billion shares on issue. And the last thing I want to look at is I'm going to look at the most recent. There we go. Activity report. I don't think they released an Appendix 5B. So let's have a look at the half-year reports. I could do this via FinChat, but I just want to look at the most recent. So they're definitely production. In fact, they have distribution. Strong cash flows they mentioned here. So this is a producing company. Oil production has been falling according to this. Sales falling, operating expenditures flat, revenue slowly dropping as well. I don't like that. Operating cash flow slowly dropping as well. I don't like that. I'll be honest with you. And yeah, I probably don't have to look at this half-year report. And then probably the next thing is why has all that been falling, production been falling, and a bit of cash there. I'm just going to have a look at the Appendix 4C, not the 4C, the cash flow report. So operating cash flow positive 32.5 million, and that's really their free cash flow. So trading not on a it's a fairly low free cash flow yield, and no, I'd say not a yield, a pretty good high cash flow yield, probably 10% or so, maybe just below 10%, and they do get a fair bit of dividends back, so cash on hand is not increasing all that much. And the other thing I'm just going to look at is debt. I did notice they paid off a little bit of debt. There's not a lot of debt. Some provisions, but yeah, that's okay. And equity is about 91.7 million. Okay. So I have no thoughts on Horizon. I'm a little bit concerned about the drop in production, whatever. There could be reasons behind that. And the share price, look at that. It's just a wave. It's a perfect wave-like pattern. And it's up. Trajectory is up. Anyway. So that's what I'm going to talk about in today's video. If you have any thoughts, any questions, just leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.